Okay, folks, welcome to Best Stock Charts for the coming week. Before we begin, we have a lot of symbols to go over, so if you are watching this on YouTube, I have the symbols listed in order in which I will review them below. If you watch this on the website, I have them posted there as well, so that way if you want to skip around, you can do so. What we're going to do first is kick it off with an overview of the Dow Jones Industrial Average going back 75 years. Then we're going to talk about our week last week. How did we do? How did we kick off the year? And then we're going to segue into the charts that we are looking to trade in the coming week and weeks. So let's get started with the Dow Jones Industrial Average. I went back 75 years. And the reason is we hit a milestone this past week on the Dow Jones Industrial Average. We closed out the week on a monthly basis with RSI 88.58, a new all-time high for the RSI on the Dow Jones Industrial Average. And we have never seen a string, let's drill down here. We have never seen a string of back-to-back up months on the Dow Jones Industrial Average. So why am I talking about this? Well, the reason is that technical analysis is not about fortune telling, predicting about where the stock market is going to go in absolute terms. Technical analysis is all about probabilities. And the probability of us continuing to press higher through 2018 with RSI near 90 on a monthly basis and an unbroken string of back-to-back months through 2018 is very, very unlikely. When you add to the mix that you have VIX, which once again, year over year, hit an 8 handle this past week, and the fact that we have ignored some very bearish economic data that was released on Friday, the non-farm payrolls numbers missed by a mile, and the prior 2 months were adjusted down slightly by a net 9,000 jobs, but the miss last month was huge. Add to that, our trade deficit hit a 6-year high as reported yesterday. What did the markets do? They ignored it. The reason is the Federal Reserve has their back, much as they have in past situations that went awry back in 2000 and in 2007. What else? Everybody is optimistic about the tax plan, but already you are seeing the blue states, those states where they can no longer, meaning the citizens, write off property and state taxes in excess of $10,000. You're seeing those states already try to find loopholes so that they continue their mad spending in those states with the rest of the country subsidizing them. And I live in New York, and believe me, our Governor Cuomo is leading the charge on trying to find a loophole so that he can spend on sanctuary cities and everything else that he wants to spend on. And California Governor Jerry Brown, same deal. So that's my tirade about the Dow Jones Industrial Average. Does that mean it cannot move higher? It most certainly can. I am not predicting a stock market crash. All I'm doing is drawing your attention to a market that is extremely overbought and ripe for a nasty correction. Now, is it a correction a la 2007 through 2009? I don't know. I'm not that smart. Is it a brief correction, the pause that refreshes, that began in 2015 into March of 2016? Not quite sure. So again, it all goes back to the probabilities. And the probability of this party continuing much higher through 2018 is improbable without a nasty correction at some point in time. The severity of that correction depends upon the black swan event that causes the correction. Let's move on. So how was our week last week? Well, in the 2018 stock market strategy, which I shared with members last weekend, I mentioned that I had a few favorite sectors, technology not being one of them. Although we traded it last week, I'll get to that in a moment. one of the sectors that we favor going into 2018 are the banks. So out of the open last week, we bought the banks. We did a quick swing trade on them. We booked profits, and we'll be looking to get back long of the banks using the FAS in the coming days and possibly weeks. But I think that this is going to be a core position for us. So we bought here. We sold the breakout. Now on Friday, we flashed a bullish key reversal. We're going to look to buy the banks. Now, how did we know to buy the banks prior to the breakout? Well, you had the Federal Reserve minutes, which were announced. And at that point in time, the banks were trading slightly up on the day. And I listened to the FOMC minutes, and I said, this is a mess. They see inflation and they see higher rates. What should do well? The banks. So while the banks pulled back, we pulled the trigger on the trade. Sure enough, we were profitable on that trade by the end of business that day. The banks then subsequently broke out. We booked profits quickly as we hit the third standard deviation Bollinger Band in red, predicting a pullback. We got the pullback. I think we're going to consolidate here. We'll buy the breakout. More to come. Members on the FAS. I'm very bullish. The next chart where we took profits on last week was the ERX, the Direction Energy Bull ETF. We spoke about this in great detail last weekend on the stock market strategy for 2018. It's posted in the members area for those members who haven't viewed it yet. If you would like to take a look, we have a lot of new members, a lot of Europeans, and finally a lot of females joining. Great stuff. Welcome aboard, ladies. So the ERX had a very strong week last week. We bought the breakout. We sold the rally. The shares pulled back on Friday. We're consolidating here. We're looking for a continuation consolidation. Then we'll buy the breakout. We're looking for a core position in the energy stocks for 2018. More to come, members. A sector that I did not anticipate buying this past week, but we did, and we booked profits on it, were the QQQs, and we traded the Pro Shares Ultra Pro Triple Qs, the leveraged ETF, and we made a nice profit. We broke out of this triangle formation. We sold our position. It continued higher. We did not get out at the top. I am worried about this sector as we proceed into earnings. They're starting hot out of the gate for 2018. They've been hot for several years now. Will they remain hot? I don't think so for 2018. Not with rising yields and rising inflation, and the jobs data was not good yesterday. If that continues, I think that the technology sector will fade, and you're going to see emerging markets do well. You're going to see energy do well, banks, anything that does well in a rising interest rate environment, they will do well. So what were leaders will become laggards, and what were laggards will become leaders in 2018. Now, last week, was it all profits? No, we took a loss last week on OVAS, and I have no problem speaking about losses because we followed a strategy. The strategy did not work out. We cut our losses early. Does that mean I do not like OVAS any longer? No, I do like it, but the problem is it's just not behaving well. So on this daily chart, we were inside of a triangle formation. That triangle formation failed. We bought it here on the 3rd, but the failure to hold this lower band of support forced us into taking a loss. We had to. And I was using more of a weekly chart because we're not day traders here. We're more investors / swing traders. And we were in a very tight wedge formation, and that wedge formation on a weekly basis failed. We cannot be long of that position. Now, if it reverses next week and closes back above either prior lower band of support, now resistance, or if we break out above the upper band of resistance, good stuff. We'll be back involved. We'll watch it. So we opened up a small opening position. We took a small loss. Had we broken out, we would have added to that position. We did not. The breakout failed, and we stopped out. Simple as that. We move on. That's what trading is all about. All right, let's talk now. I'm going to go over the weekly charts on best stock charts for members going into the next trading week. I'm going to prepare the week ahead commentary. In the week ahead commentary, I review the overall markets and major sectors in Market Pulse Check. And then we segue into a deep dive of the stocks I go over on best stock charts. And we drill down to how those shares are setting up on a daily basis and potentially on an intraday basis to talk about strategy for opening up a position. We'll then segue into the positions that we're holding and what our plan is for those trades. So let's get started. BABA weekly chart. We broke out last week, a very strong chart, no all-time high yet, very close. So this is one we're definitely going to want to talk about more on the week ahead commentary. And you may be saying, Bob, Jesus, I have a small trading account. This is a very expensive stock, meaning in terms of share price, not necessarily PE. The options are very liquid. So me, myself, I would probably buy the call options and maybe even put on a bull call spread to hedge my risk. So BABA is looking good. Longer term, you had the Chinese markets break out last week. BABA followed suit as it is a Chinese company. So that's good. Volume last week, outstanding. We broke out an ultimate oscillator. Loving the chart. Members, more to come here. Next chart up, GPN, Global Payments. We broke out on price out of this wedge formation. We have a double bottom setup forming on Stokes off of support. We have a double bottom setup on our downtrend channel on RSI. So the chart is looking good. I don't like the Stoke RSI. I don't like choppy price action. This failure to close above the 50 level on a consistent basis and put in higher highs is a concern to me, but that may be coming to an end. So while I'm bullish on the price action, some of the indicators have me worried. So we like the shares. We'll drill down to do a deep dive on the week ahead commentary, and we'll discuss it with members. Johnson & Johnson. I'm very, very bullish on consumer staples. And you may be saying consumer staples have not broken out yet. They will. Consumer staples are heading higher. They're a favorite sector of mine for 2018. Consumer discretionary has gotten ahead of itself. And while there's probably still more upside, I prefer consumer staples. What else do I like? Pharmaceuticals and biotechs. What stock has exposure to all those sectors? Johnson & Johnson. We flashed a bullish key reversal in this bull flag formation. We did not break out in a weekly chart yet. No breakout yet on RSI. We did break out on Ultimate Oscillator. So the chart of Johnson & Johnson is setting up nicely. Members, more to come on the week ahead commentary. McCormick. And you may be saying, man, what's your deal? A spice company? Yes. Consumer staples, folks. People have to eat. If we have a black swan event, as I predict that we will, consumer staples, commodities, and the drug area is where you want to be. So MKC looking good, a bullish key reversal off the lower band of the rising uptrend channel on a weekly basis. RSI rising and breaking out. Volume could have been better. That's one negative. Stokes are rising, MACD rising, the histogram anyway. Looking good. Members, more to come on this one. The next chart up is Vulcan Materials weekly chart. Here's one that really illustrates what I teach members all the time, and that is that the RSI is not simply an indicator used for overbought and oversold conditions. Nothing could be further from the truth. If you use it wisely and frequently, you'll find that it makes for a great indicator for spotting divergences. What do I mean? Well, we broke out last week on price, but would you believe that we broke out on RSI back here the week of October the 23rd, 2017, right here. And we pulled back several times, retested the breakout point, validated it, and last week finally price pushed through, as did RSI. So we had an indicator telling us back in October that there was strength on VMC, and it wasn't even at the highs of its trading range. The stochastics, we have a double bottom setup, higher low formed, and we broke out last week. Volume, outstanding last week. So the chart of VMC looking rock solid. Members, more to come on Vulcan Materials. Yum Brands. I've spoken about this one in the past. In fact, I spoke about it here. This is one of our best stock chart videos from, I guess, back in October, where I said, buy the breakout. And had you done so, you would have had a big fat profit. The shares rallied from the mid-70s up to the mid-80s. Now we're consolidating once again. We're looking for a breakout on Yum Brands. Members, more to come. We flashed a bullish key reversal last week. We'll be talking about Yum Brands on the week ahead commentary. We have the Stokes rising, RSI hooking back up. So Yum Brands looking rock solid. Hack. This is the ETF for cybersecurity. Now, there are several cybersecurity trades that I like. VDSI, FireEye, and CyberArk. So I'm not sure whether or not I'll play the ETF or the individual name. But for the purposes of speaking about the security sector, the cybersecurity sector, let's talk hack. Now, we have a cup with handle formation, which has broken out on RSI. We have our Stokes, which are rising. We reversed off of the lower band of support, which is rising. And we closed at a new 52-week high. In fact, a multi-year high last week, a significant breakout. So members, we'll be talking more about the cybersecurity arena in the week ahead commentary, which is coming out the latest on Sunday. PayPal, weekly chart. We broke out last week. This is one of two trades that I like in this arena. I'm going to narrow down from 2 to 1 my preferred stock of the week, whether it be PayPal or Broadridge Financial Solutions. Probably very few have heard about this company, but they do have exposure to the cryptocurrency plays as well. Now, granted, on a weekly basis, they are overbought, but they can go higher. RSI at current is 84.76. Stokes are rising. We're very close to a new breakout and an all-time high on Broadridge. I tend to favor stocks that are very close to new all-time highs. Why? It's because there's no overhead supply, no prior buyers who bought high and just simply want to get made whole, which are going to act as resistance. We don't have that problem here. Not that you have that much of a problem with PayPal either. We're very close to a new all-time high there as well. So it's going to be a struggle figuring out which one I want to go with, but I doubt I'm going to go with both. So members, more to come on the week ahead commentary. We are going to leave off with Apple. Weekly chart. We broke out last week out of this triangle formation. We don't have a breakout yet on RSI, so that's a bit of a concern. But the fact that we closed at the highs of the week, I do like that quite a bit. We broke out on Ultimate Oscillator back in late October. We've pulled back. Now we're beginning to hook back up, and no breakout yet. So I like Apple moving into the new trading week, but I'm going to want to do a deep dive into the daily and potentially intraday charts to see how we are looking from not this higher level view, but on a micro basis. And we'll decide whether or not we want to put on a trade of Apple. Because I am concerned about the TQQQ plays, especially as we proceed into earnings. I think that they're being bid up into earnings, and I am concerned about leadership in 2018 with higher rates. It's not going to favor the consumer. We've had rising rates, as I discussed in our 2018 stock market forecast. I've shown the rise in the producer price index, which is a measure of inflation at the producer level. We are now seeing it reflected after a consolidation in the CPI. So while trading charts is excellent, I mean, fantastic, it's treated me very, very well in life, you need to also pay attention to the longer-term trends, and that longer-term trends are the macroeconomics of rising inflation and potentially rising yields. So a caution flag is on the track for the, not just Apple, the QQQ names. And that's it, folks. If you're watching this on YouTube, please subscribe to my channel and click that bell notification button, and you'll be notified when I publish new videos on YouTube. If you're watching this on the website, enter your email address. We'll send you out some free tutorials. We hate spam too. You'll not be spammed, and you'll also get my videos sent to your inbox. If you're watching this on StockTwits or Twitter, follow me there, leave a comment, and I will certainly get back to you. Everybody have a profitable trading week. Enjoy the remainder of your weekend. Be well.